Good morning. It is Friday, February 13th, 2026. This is your daily global briefing. I am your anchor for today, delivering deep insights into the most significant developments from the past 24 hours. We begin our broadcast on the world stage, where diplomatic maneuvers in the Arctic have reached a critical juncture. The United States and Denmark have officially entered a new phase of bilateral negotiations regarding the shared security of Greenland. This follows a period of heightened rhetoric, but the focus has now shifted toward the establishment of a joint defense and research corridor. This initiative aims to address the melting ice caps while reinforcing NATO presence in the far north. Simultaneously, in the Middle East, a tentative truce has been reached in the Red Sea region. Mediators from Oman and Qatar report that all major parties have agreed to a localized pause in hostilities to allow for the safe passage of humanitarian aid. While the situation remains fragile, diplomatic observers believe this could be the first step toward a more permanent stabilization of one of the world's most vital maritime passages.
Moving into the global economy, the narrative is being driven by a surge in industrial output within the European Union. Germany and France have reported a surprising jump in manufacturing activity, fueled by the rapid integration of green energy solutions into heavy industry. This resurgence suggests that the Eurozone may be avoiding a widely predicted slowdown, as businesses pivot toward domestic energy independence. However, the World Bank has issued a stern warning regarding the rising cost of debt for mid-sized economies. As global interest rates remain elevated, the gap between nations that can afford green transitions and those that cannot is widening. The bank is calling for a major overhaul of international lending practices to prevent a structural decoupling of the global south from the advanced northern economies.
In the realm of finance, all eyes are on the sudden volatility in the cryptocurrency markets following a massive regulatory shift in Southeast Asia. Several major economies in the region have introduced a unified framework for digital asset taxation and oversight. This coordinated effort led to a sharp, short-term sell-off as investors adjusted to the new transparency requirements. On Wall Street, the focus remains on the sovereign bond market. The yield on the United States 30-year Treasury bond touched its highest level in months after a batch of strong labor data suggested that consumer spending remains robust. This has led to a strengthening of the dollar against a basket of major currencies, including the yen and the pound. Financial institutions are now recalibrating their portfolios, moving away from high-growth tech stocks and into defensive positions as they anticipate a period of sustained high capital costs.
Turning our attention to technology, we are witnessing a fundamental shift in the artificial intelligence landscape. OpenAI has released a comprehensive progress report on its Skyline model, noting that it has successfully assisted researchers in identifying new compound candidates for carbon capture technology. This marks a transition from general-purpose AI toward highly specialized, industrial-grade tools. In the semiconductor sector, the news is dominated by the announcement of a new fabrication facility in Central Texas. This plant is designed specifically for the production of 2-nanometer chips, aiming to shorten the supply chain for American high-tech firms. This move is part of a broader trend of onshoring critical technology production to mitigate the risks of future geopolitical disruptions. Experts suggest that this regionalization of the chip industry will lead to more resilient, but potentially more expensive consumer electronics in the coming decade.
Finally, we look at the logistics and supply chain networks that underpin our global trade. The industry is currently managing the fallout from a major cyber incident at a regional hub in the port of Singapore. While the automated systems were restored within hours, the backlog of vessels has led to a temporary spike in container spot rates for trans-Pacific routes. To manage this congestion, logistics giants are increasingly turning to data-driven predictive analytics to reroute cargo through less crowded gateways in Western Canada and Mexico. In the air freight sector, we're seeing a record expansion of electric cargo drone networks in Northern Europe. These networks are now handling up to 15% of last-mile deliveries in rural areas, significantly reducing the carbon footprint of the regional supply chain. This shift toward electrification is being accelerated by new environmental regulations that impose heavy levies on traditional combustion engines for short-haul transport. That concludes our global briefing for today. Thank you for joining us.